Well, there are a lot of very happy investors today. Telkom posted a rise in its full-year earnings, but it continues to face shrinking revenues. So how do the two add up? You've got a profit jump there of 35% in the headline earnings. You've got a share price that's up 160% in the past year, but the revenues are flat. Philip Short, investment analyst at Old Mutual Investment Group Equities, joins us now. Philip, I suppose, just to put that question to bed, it is part of the fact that this was a turnaround. And a year ago, when the share was trading about 12 or 13 rand, and it's 42 today, it really was just too cheap.
Yes, you hear a lot of commentary on its last 12-month performance, and it's, as you say, it's done 160% up. But if you look over the last 5 years, it's pretty much flat, where the market, or the JSE, is the all-share index has been up almost double. So it depends where you're taking your starting point. But yes, it does seem that they have started to turn things around.
It's a very good point you make there, Philip, because I've got a 3-year graph in front of me here, and the share price 3 years ago today was 35 rand a share, and it went all the way down to 12 rand, and then it's been climbing up the mountain thereafter. What caused it to decline so sharply in that first year and a half period, and why has it been reversed in the past 12 months?
I think what started happening with the decline was a couple of investments that didn't work out. For example, if we look at Multilinks, which was a 10 billion rand investment in Nigeria, which they had to write off. And there were some other things, the management weren't completing on their strategy. So things started disappointing, and they were just burning cash on bad investments. And then, Telkom Mobile with ATA, when that first started, that's still loss-making. So there were a couple of investments which didn't work out too well. I think management didn't run the ship properly. And new management has now started to take things into their own hands, and that's causing the upward trend.
So clearly the market is saying we are confident in these new guys, and we'll forget about what happened in the last 3 years and look ahead. This set of financial results, do they justify that confidence?
It's quite a polarized view in the market. There's still a lot of people who are not buying into the stock at the moment. I think a lot of people have been burnt in the past when that stock dropped, as we mentioned earlier. So I think that a lot of people are still waiting on the sidelines. Looking at the results today, it's not trading at a very demanding multiple. In fact, if you look at the EV over EBITDA, it's trading at 3 times. When you look at global peers of integrated telcos, they're trading at about 5 times. Its PE is about 11 times. And they're not talking, they're actually giving quite positive guidance on FY 15, 16, and 17 of stabilizing to increasing revenues and actually expanding on their EBITDA margin. So, I mean, if they can fulfill on that, we should expect to see the stock run further.
There's some things in these results that you can get quite excited about. The 30% plus growth at the headline earnings level, the reduction in debt by about 1/3. But was there anything in here outside of the revenue that didn't seem to grow that was worrying?
Good point. I think for me the most important thing was costs, and that's because you're in with fixed line. The majority of the business is fixed line. That is a declining industry. So structurally, that part is not attractive. What they can do and where they can make the difference when they can grow earnings is by taking out a lot of fat that is sitting in their costs. They haven't been able to do that very well in the past. Management has committed that they will be doing that going forward. And they've actually started doing that in these results. And I think that's the key focus area for an investor when looking at Telkom, must be looking at, can they continue pulling out the costs?
What about the mobile side? As you mentioned a little while ago, ATA was hemorrhaged very badly. They brought in a new head of the mobile division who seems to have gotten the act together. Your view on that? It's
an interesting point. I think The most interesting thing for me with them in mobile and for them to turn it around is this type that they've mentioned that they will be doing with MTN South Africa. For me to really get that business profitable, they're going to need someone like MTN to partner with. They need the network, and they need MTN's larger network, and they need MTN's expertise in mobile. So for me, the key would be to have that contract tied up as soon as possible.
That's an interesting point. If you've got Cell C, who are piggybacking off the Vodacom network at times, and now Telkom Mobile getting closer to MTN, would that not reduce competition then?
It would, but we are sort of forced. I think they are forced they're both forced to do something, because with Vodacom that's now gone to Neotel, and we are seeing worldwide that you actually are seeing mobile players which are trying to get in onto the fixed line. So they need to do it. It's for a converged solution of having fixed and mobile. So if they can share each other's networks, MTN and Telkom, it might make the market less competitive. It will leave Cell C out by itself, but I think that's how it's going to end up.
Philip, there's all kinds of rumors and speculation about Netflix coming into South Africa as a partner with Telkom. We are seeing the convergence of those markets. Are you expecting that they did try once before to go into the media area through Telkom Media? That was a disaster. Expecting that Telkom might put a toe in the water there again?
They have said that they will be doing that. They have opened up to those type of players, the Netflixes and Bertelsmann, etc., and said, please, come up with an offer, an idea of how you can put your content through our fiber. So listening today on the call on the Telkom results, they've actually highlighted in the next financial year all the areas where they can have fiber to the home, and it was interesting to see that it's happening a little bit quicker than I initially expected, the amount of fiber to the amount of area that they're covering. So they're going to need to do that first, get the fiber to the home, before they can start negotiating with Netflix and others who can provide that content over their fiber.
Now, you'll recall a year ago there was great concern when the Korean deal fell apart. With hindsight, was that a good thing?
I don't know. It's now since the development with MTN, that could, any positive that investors may feel was lost with not doing that KT deal could now possibly be regained with the MTN deal.
And then finally, the company has said it's looking to pay dividends again from next year. Is that something that will hearten investors?
That's an extremely positive tone for them to set. People usually who look at telcos as a sector to invest in, because they're cash-generating companies, high cash-generating companies, usually with low top-line growth, investors expect a dividend. It's one of the reasons why they invest in telcos. So I think that would be a very positive underpin for the stock, having a dividend, and I think just for sentiment, showing that they've got the cash to pay it as well is very positive.
That was Philip Short, investment analyst at Old Mutual Investment Group Equities.